Hey, I'm Ben from Modern Graham, and today we are going to talk about AMC Entertainment Holdings Inc., a meme stock, the one of the big meme stocks. So stick around and see how it looks in a Modern Graham valuation. Ticker is AMC. The current price is 703. The sector is communication services, and the industry is media diversified. Of course, AMC is a movie theater company, and I'm sure anybody watching this knows what AMC is, especially it's been all over the news. They run movie theaters, they've been getting retail investors to invest. And yeah, let's see how it looks here. So, the balance sheet. These are the items that are most important in a modern Graham valuation. There's the total current assets, the total current liabilities, the long term debt, total assets, the intangible assets, the total liabilities, and the outstanding shares. And all of these things will come into play in this valuation. Over here, we have a chart showing the company's earnings per share. So they have had years that are up. They have had years that are down. 2019, they had a huge drop, and they have pretty much had poor earnings since then. But looking at a longer view, we have 12 years of earnings to look at here, and you can see the detail. They lost nearly $40 in 2020. Okay, so that must be 2020 here. But anyway, here you can see that they had a huge loss that year, probably due to the pandemic. I mean, the pandemic was a pretty big factor in preventing people from going to a movie theater, which is what AMC does. But they have recovered a bit. They're still losing money. It's estimated that this year they will lose 92 cents per share, but that is much better than in 2020, and that is important. EPS MG is earnings per share modern Graham. That is a weighted average of the last 5 years of earnings. So we take these five, we put the most weight on the current one and the least weight on the oldest one. That smooths out that business cycle as much as we can to show more trends in the long-term view. And you can see that the company was doing well up until 2017. That weighted average was rising, and then they took a hit there, and they've taken a hit again. But that is steadily improving, so that is good to see as well. Dividends, you can see that they previously paid a dividend up until 2020 when they cut that dividend. They didn't in the first few years as well. But then dividend growth is not something that you're looking at with AMC. Stage one, determining if the company is suitable for the defensive or the enterprising investor. And remember, the defensive investor is somebody who is not willing to go to further research into a company, so they have very stringent requirements that they want the company to look at. First, we have market cap has to be over $2 billion. AMC is at 3.7 billion, so we have a pass there. Current ratio should be over 2. AMC, it is actually not a great current ratio. It is 0.56, so they have more current liabilities than current assets. So we fail there. Earnings stability, again, they've had negative earnings in the last 10 years, I should say, and so they fail that as well. Dividend payments for 10 years, they fail that. They have not paid a dividend every year. They haven't paid one this year, and they didn't pay one in 12 or 13, so we failed that. Earnings growth, they fail that. PEMG below 20, well, they fail that because they have a negative earnings per share, so that makes it fail there. Price to book ratio under 2.5, it fails that too. So they get 1 point out of the total 7, and that was the easiest one for a larger company because that was market cap. So they're not suitable for the defensive investor. What about the enterprising investor? So remember, the enterprising investor is someone who is willing to take the further step of going into detailed investing research into a company. And a company must pass 4 out of 5 tests for the enterprising investor. The first one is current ratio. It should be over 1.5. It is not, of course. Debt to net current assets should be under 1.1. It is negative here, so that fails as well. Positive earnings per share. It has had negative years, so fail that. Does not pay a dividend. And earnings growth, that should be negative as well. So it gets a 0 score for enterprising investor. That means the company is speculative. So when you continue on this journey into researching the company, know that it's a higher risk than the defensive or enterprising investor, and you want to proceed carefully. If you're liking this video, be sure to hit that like button. It helps spread the video to more viewers like you on YouTube, and subscribe to the channel for more of this. And of course, click when you're done with the video, click on to download my free valuation calculator. That link is in the description and the comments below. Now, stage 2, a determination of the intrinsic value. We want to look at the Benjamin Graham formula from his book, The Intelligent Investor, and that is value equals earnings per share modern Graham. Actually, his is not earnings per share modern Graham. It's just regular earnings per share times 8.5 times 2 times the growth rate. And I've updated that to be my weighted average earnings per share. So looking at that, we have two variables to calculate: earnings per share modern Graham, the weighted average, and the growth. And earnings per share modern Graham, again, we look at 5 years of earnings. We get negative 901 for the current year. And then we use that to calculate the growth, and we get terrible growth in the earnings per share. And of course, it's negative as well, so we get a 0 value. Now, that means that, again, this is a speculative company, so it is very risky. You are essentially gambling when you're looking at this. You can't look at it as a guaranteed, no investment is guaranteed, but you're not looking at it with an expectation that over the long term you will be receiving income from your investment. You are speculating on what the market will do with this company, and the market may go up or down, and that is very, very key to remember. The modern Graham grade, it gets 0. I mean, the PE is below the industry average, but that's just because the model gets really confused by a negative earnings when calculating the PE. So that is a poor grade. Further research. At this point, if you had decided that it was suitable for your investor type, you would want to do further research, and we would look at things like the net current asset value formula and the Graham number formula and the PEMG formula, but none of that really applies this time. Let's move to the market. So stage 4 is to look at the market. And normally, at this point in the valuation, I've said that, this is a defensive or enterprising investor company, and it is undervalued, and therefore you should consider whether or not it fits your portfolio. And stage 4 is to decide when a great time to buy is. But for a speculative company, the key is really to remember that you are speculating. So what the market does is very, very important, and technical analysis is key when you want to figure out what the market is doing. And I know a lot of value investors out there are like, what is he talking about? Nobody should do technical analysis. Well, no, that's not true. There is a place for it, and it can be useful because the market has shown over time that it follows trends. And there's so many people out there who use technical analysis to make their decisions. And even though we as value investors typically like to just look at the financial statements, it can be very useful when you're speculating on the market or when you are trying to maximize your profit to actually look at the charts. So we're actually going to add one more line here. These green horizontal lines are support and resistance levels that the company has seen lately. We're looking at the daily view, and you can see that it came down and it hit this mark in September and bounced back up, and then it came and fell through. And then it went down to this other one, and it struggled there, and then it came back up and tried to get back to that one, but then it came down. And it has tended to stay around those numbers. Now, as I'm recording this, today the company has fallen below this support level. So it will be interesting to see if it closes below there. And if it does, then it might be likely that it is heading down to 639 or like around here. and then it might bounce around a little bit more, or it might continue to fall down to 520 if it continues to fall through that. Down here, we have the relative strength index, and this shows the momentum in the stock. And you can see that it had a lot of momentum here. It built that momentum, and then it kind of stalled. And now it is on its way back down. And the red line is the moving average in the RSI. And again, you can see that it had positive momentum when it crossed over this longer term average. And that is key, because sometimes you can see, like here, it had a crossover and it had long-term upwards momentum, even though it would have these large falls. This is back in the summer of 22. In June, it crossed over and it had some positive momentum for a while, and then it fell down because it was overbought here. And then it came back down and had negative momentum, especially once it crossed over that moving average in the RSI again. It had negative momentum for a couple of months, but now it seems like it might have positive momentum again. Another clue that we might be in a bullish pattern over the long term is that RSI has not fallen below 30. And that is very interesting, because when you're in a bullish pattern, the RSI can get above 70, but the market keeps it above 30. It won't drop below that. And you can see going back in May, it was the last time it was below 30, and that would be an oversold situation. And then momentum started to shift, and it had that rise, and it stayed, or like then it switched back over to a bullish pattern, which it has done before. It alternates a little bit. But right now, it would seem to be that it came down and it tested that low RSI, but it did not fall below that. So I think this one might be moving up. And another script I've created in TraderView, which is my preferred charting platform, is this one. And this is a little bit complicated to look at, but you can see there's a red line there that is the short-term moving average. Then we have a blue, that is the longer-term moving average. And we have the black, which is a really long moving average. And you can see that it was very close to getting that short-term moving average to crossover. And I think that is a lot of the pressure on this right now, is that there's pressure to keep it below that. But again, it will be interesting to see if it can stay above that or where we're going from that. The other thing that is interesting is that these dark green bands here are the Bollinger Bands, and they tightened up here before we had a movement there, and they are starting to tighten again. So we might see a little bit more smaller movement in here for a little bit, and then see where it goes from there. But anyway, that is my view on AMC. I hope you liked it. Be sure to click on the video on the screen now to see another analysis from me. Thanks for watching, and I will catch you next time. Take care.